And joining us now, our first guest via satellite from Tampa, Florida, are two gentlemen with a company called Best Choice Software. They're the co-CEOs of the company, Sonny Decker and Pete Hoyt. Gentlemen, welcome to the program.
Hello, Don.
Hi, Don.
Glad to be here.
You know, gentlemen, we've been seeing each other at financial trade shows all over the country for the last 10 or 11 years, and I'm always fascinated because whenever you guys do a presentation at one of these shows, people are stopping their tracks. They're watching what you're doing with your PowerPoint presentation. I wanted to bring that to television, so I'm really glad to have you here. Now, you're said to be looking at repeating stock price history. You like to look at history to predict the future. Can you elaborate?
I'd be very happy to, Don. First thing that we have to answer is, what is Best Choice? And Best Choice is a program that was started 28 years ago by my partner Pete, has made millions of dollars, and it will never be finished. We call Best Choice a decision-making tool because we take the emotion out of trading, and emotion gets you in trouble. I'd like to say something up front. People don't know what they don't know. We're going to elaborate on that because making money in the market is not that difficult, and in the next couple of minutes I'm going to show you exactly what I mean. To make money in the markets, you've got to be right about the future. And there's only two things that can happen in the future. There's the known and the unknown. When you buy a stock, and if you bought a stock today, obviously you hope that stock goes up. But that stock may very well go flat, and it could go down. Do you know which direction is right before it happens? You have 2 chances out of 3 of being wrong. And you don't want to lose money. So now the question is, how do you know when to buy and sell? Well, I'm going to show you a chart that is a regular chart that it could be any stock on anybody's computer, and today, the current day, is the right-hand bar of the screen. Everything else to the left is history. Now, you don't know if today is the time to buy, sell, is it going to go up or down? So you just don't know. So what happened 28 years ago when my partner Pete converted a regular chart into a logarithmic chart? The first thing he does is calculate the average rate of growth, which is that center yellow line. And as you can see on this chart, it's 158%. Now, the reason that we have to know the average growth is stocks don't go straight up, they go up and down. So we want to buy when stocks are very, very low, and that low yellow line shows us that every time we get below that line, stocks turn around and go up. So it's a low extreme, as we call it, but it's a buying opportunity. Now, if you buy at the bottom and the stocks go on up, then on the opposite side, they get too high. They get overbought, or we consider oversold at a high extreme. So those 3 yellow lines enable us to do some tremendous timing. So a quick review is, there's what you would see on Best Choice, using Best Choice, and here is what your people are seeing, everyone out there. You don't know when to buy using a regular chart. And that's the reason that some people find it hard to believe about the profits that we talk about. We've come up with a formula for making money in a market, and we call it DDST. Now, the first part of the formula, the D, is the direction. Is the stock going to go up or is it going to go down? Why do we want to know that? Because obviously if it's going up, we can buy, or if it's going down, sell. The next thing we have to know is the duration. How long is that stock going to move? 30, 60, 90 days? Where do we get in? That's the third point, the strike price, especially if you're doing an option. Timing. When is that stock going to move? Now, we've covered 4 parts of the formula, and if you knew the direction and the duration, where to get in, and when it was going to move, do you think you can make money? I think it's a no-brainer. You can make a lot of money, so you have one answer left, and that is, when do you take your profits? So we have now further refined the program into what we call seasonality, and we look at the historical movement of a stock to try to identify a predictable time where we can buy or sell with a very high probability of success. Now, probability, that's the key word. By analyzing the history of a stock, we reduce the risk in every trade that we do in the market. We start out, first of all, with part of the program, we have a search wizard. And the search wizard enables us to go in and pick the stocks that meet our conditions. And this is the whole universe of stocks. Once we pick the stocks, then we use our second wizard we call the cycle wizard, and this is the time that we want to know when is the time to enter a trade, because timing is everything. Now here's a chart of a stock that someone came up to our booth and asked if they could see this chart, and we looked at the chart, and you can see over on the right hand side it was a $45 chart a couple of months ago. I mean a $45 stock, and it has been down here at 32 on August the 8th. And we told the person that this stock is going to go up. And of course he couldn't believe it, but now we flip and we show him the seasonal history of the chart. And if you look at that yellow line with that red arrow, you can see that's August the 8th. It had gone up in the past 9 out of 10 times. So there's that word probability. And here is exactly what happened on that stock the next day. It started to move up, and you can see that the move was a $455,000 move, because this man had bought 650 options controlling 65,000 shares of stock. So we boil it down to simple: just 3 success in the market, use the wizard to find the stocks, cycle wizard to look for reoccurring moves, and then use those extremes which show us when we can do the top and the bottom. And if we can really narrow it down to precise day, you can either buy the stock, or we suggest also buying options. Now, to give you an idea of what the extremes are, those are those 3 yellow lines. And simply it's a number on your screen every day between 0 and 100 that is comparing the price today with the average price of the stock based on its past. Blowing it up so that the audience can see exactly what we're doing. That yellow line is an average, so the value is 50. The lower one, we have it set at a level of 10, and we have the upper one set at 90. Now, all the information that everyone would see is on the screen, but since they're not acquainted, I'll blow it up. And over on the right, you can see extreme percent is 0.2, and I put it up on the screen here, and the stock is up here at $24. Now, if what we said is right, we can only go to 100, and the stock is going to turn around. Let's see what happened. And here we are, 6 weeks later. The stock had dropped from $24 down to 12, and you can see the extreme now is reading 0.2. So we've gone from one extreme to the other, and with this allows us to make a tremendous amount of money.
I can see why people crowd around your booths at trade shows, Sonny. Now, Pete, you developed this software. You placed a lot of emphasis on what you call seasonality. Can you tell us why?
Sure. What I have here to start off with is a chart on wheat. Now, if we think about wheat, every summer, the farmers, there's millions of farmers that have billions of bushels of wheat for sale. So in the summertime, would you think that the price of wheat would be high or low? Well, based upon supply and demand, if there's a lot of supply and very low demand, the price is going to be relatively cheap. And we can see this on this yellow line that you can see on the chart in the background here. Notice that the low on wheat normally occurs in July. Now, do we really care where the low or the high occurs? No, we want to know when wheat goes up or down, and we want to know this ahead of time. This is what all traders want to know before it happens, like what Sonny said. So if I'm a wheat trader, I see this chart. I know that the summertime is the absolute low. Now what I'm going to do is drag my mouse. Now if you notice over in September, we see that the yellow line slopes fairly strongly upwards. So if I drag my mouse over that September time period, you can see that the wheat has gone up 40 out of 47 years. That's what the legend on the right tells us. So that's a high probability. That's 85% of the time.
So Pete, you're saying you can apply the same methodology then to picking stocks?
Yes, stocks, commodities, it doesn't matter. And there's a huge universe. We've got over 40,000 different things that a user can look at. So there's a tremendous choice.
Yeah, I'm just amazed by the concept and what your software can do using history to predict the future. How do people get more information about Best Choice software?
Well, the simplest way is go on the internet, and type in bestchoicesoftware.com and download a free demo.
Well, gentlemen, this has been fascinating. I want to invite you for the next 3 months to come on the program every week and show us how your software can time the market. Again, bestchoicesoftware.com to get a free demo. Sonny, Pete, thanks so much.
We look forward to it, Don.